morning, everyone. Today is the 26th of June, so it's the last week of the month, of the second quarter, and also of the first semester of the year. So starting next week, it starts a new quarter and the second part of the year. So until now, I hope you guys are having a positive first part of the year, and yeah, just keep focusing on your strategy, on your process, and good luck with the next with the second part for the second part of the year. So welcome everyone. It's Monday. Mondays we do the weekly market analysis. Right, my name is Pedro, and I'm the senior market analyst at Alphachain. So yes, in today's session, usually we look at what happened last week in regards to the news, what was the biggest catalysts that affected the market, and then how the market reacted to that. And of course, the main focus already on what we are expecting for the week ahead, and what kind of news we are going to have that may affect the market. Right? And then there are news that there are included in the calendar list, and then of course there are other type of news that they are not planned, and this is exactly what happened over the weekend. If you paid attention to it, there was a situation in Russia in the conflict between basically the Wagner group, which is part of the Russian military forces that were not happy basically with Putin, and they kind of started on Saturday morning kind of a civil war that has broken out in Russia. So basically the Wagner group leader Prigozhin, it was kind of going or moving towards Moscow to confront Putin. Meanwhile, everything's escalated quite quickly, so that helped because we didn't even, the situation was fixed basically in 24 hours and didn't really last until Monday. Otherwise, we would have seen a proper reaction within the market. Since that didn't happen, basically the resolution that they found, it was for the leader of the Wagner group, basically is going to be moving towards Belarus. It was an agreement that, a deal that was arranged by the Belarusian president, Alexander Lukashenko. And with that agreement, basically all the charges has been dropped of treason and so on to the Wagner group. So this is basically what's going on in there. So how this situation plays between the conflict of Russia and Ukraine, that's a good question, but overall it looks like that Putin is being tested or is at his lowest point in terms of this leadership in Russia. So let's see for how much longer this situation is going to last. This was a big surprise to everyone, and in particular to Putin and for his leadership. So yes, is this good news for Ukraine? Most likely. Again, even though this situation, it looks like it has been solved, but this may be just the beginning of a new phase between this war between Russia and Ukraine. We'll see what may happen in the next few days, few weeks, even months, and how the market is going to react to it. In particular, the commodities like oil, gold, and so on are going to react to it. Again, because everything was solved basically in 24 hours, even before the market opened, we didn't really see much reaction in the market. So that was a little bit of a surprise that happened over the weekend. If you pay attention to what happened now to the news from last week, and that was scheduled. Last week, it was basically the completion of the central banker's decision right? So we started 2 weeks ago with the Fed, ECB, and then BOG, and then last week we had the Switzerland National Bank, Bank of England, also announcing their interest rate decisions. Swiss National Bank, it increased from 1.5% to 1.75%, so that was a little bit in alignment with what was expected. However, the biggest surprise, it happened actually in the UK with the Bank of England. Initially, it was expected to be just a 25 basis hike from 4.5% to 4.75. However, the Bank of England actually surprised, and it was a very bit more aggressive with a 50 basis points hike. Now, the reason for that is because the day before the meeting, so last Wednesday, there was a CPI announcement in the UK, and it was actually worse than expected, not the normal CPI, but the core CPI, right? So the normal CPI, it came out higher than expected, but it stayed the same as the previous month. So at this point, the normal CPI in the UK is at 8.7%, right? We peaked, or the CPI in the UK peaked back in November at 11.1%, but it's still quite sticky and it doesn't really move, or is not moving down as expected. Even if you compare with US or the Eurozone, you can see that is still quite high comparing with the other ones, which are basically at around 5.6% or something like that, or even below 5% in the US. Even a worse situation is the core CPI. Right? Core CPI continues to create new highs in here, like you haven't really reached the peak, and this is a big concern for the UK economy, right? Because we are looking to see that this is becoming quite sticky. So it's no longer kind of the energy or food. The main concern is actually these high prices that are being implemented in the services and so on. And this can be a really concerned how to push this CPI, this core CPI, to the downside. Right, so this was on Wednesday. Therefore, on Thursday, there was a lot of pressure for the Bank of England to be slightly more aggressive than it was expected. And that's exactly what they did. Meanwhile, until, for example, if not mistaken, until next February 2024, I think is expected for the Bank of England to hike at least another 100 basis points, right, to reach the 6% interest rate decision. So that's something now to keep an eye on and to see what's going to be the next steps from now until the next meeting and for the next few months. Most likely, this is still not the peak. Again, at least another couple of hikes we are expected to see. So that's a little bit of the central bankers' decision. Around this time, we saw the pound moving to the downside, and there was kind of a little bit of a shift when we saw the Bank of England making this surprise with the 50 basis points. So that's in terms of central bankers. On the other side, we had Fed Chair Powell testifying in front of Senate for 2 days, last Wednesday and Thursday. Basically, he carried on with the same message that he had the week before during the FOMC, right? So again, the possibility of maybe another 2 hikes, as it was forecasted with a dot plot during the FOMC meeting. Now, is that exactly going to be the case, or is just one more hike and that's it? That's something to keep an eye on and to see what exactly is going to happen. But high probability that we are going to have another hike in the from the Fed, and at this point is going to be priced in the next meeting on the 26th of July. As you can see in here, basically 71% possibility of that hike to happen in the next meeting. Now it's going to be a second one. That's going to be the big question mark. And are we going to have any cut reductions until the end of the year? That's going to be another question as well. From what the Chair Powell has been saying, no, most likely there's not going to be any rate cut until the end of the year. So that was basically in terms of the central bankers' intervention last week. And then on Friday, we basically finished the week with a negative PMI data all across the world. We started with in Australia, in the Eurozone, in the UK, and finishing with in the US, right? So manufacturing PMI negative in all these countries, below 50, but aside even being below 50 is actually lower than the previous month. So you are noticing deterioration in here of the manufacturing PMI, and the services PMI even though they are above 50, so it kind of still is above that 50 threshold where it shows expansion versus contraction. However, it's starting to be lower than the previous month. So we are noticing a decline on the services PMI as well, which goes into a big concern overall in terms of the economy and how eventually the economy is reacting to how these interest rate decisions and hikes that have been going on for the last year or so, right? So in here, in terms of the economy, you are seeing the effect of the hikes, which most likely central bankers still want to notice the effects on unemployment and on the labor force, which at this point is quite strong still. So this was basically what happened last week in terms of the big news events. For the week ahead, and what we are noticing for this week is basically a few inflation reports to come out, starting with in Canada. Again, to stay a little bit more of the same, a little bit of a decline in Canada. Then you're going to have also in Australia, right? It's going to be interesting to see if it comes out better, kind of lower or not in terms of forecasting already what the Reserve Bank of Australia is going to do in terms of the next interest rate decision. Like it has been surprising with 2 hikes in a row when it was expected to stay unchanged. And then also in the Eurozone, which is going to be announced on Friday or Thursday. Yeah, on Friday, again, Eurozone in the CPI in the Eurozone as well. Again, continuation maybe to the downside. The normal CPI, but however, the core CPI to be a little bit slight to the upside, and then finishing with the core PC in the US on Friday as well. So a little bit of CPI data or inflation reports coming out this week. And one last point is in terms of the central bankers, which they are going to all meet in Portugal in Sintra on Wednesday in the ECB forum on central banking, right? Most likely they're going to be asked questions about where they see the interest rates to go to, what are they look at the inflation until where and what's the target, and most likely also asking questions about the labor force and maybe how this situation in Russia may be also a topic to discuss during this forum in Portugal. Is going to be there the Christine Lagarde from the ECB, the government baby from the BOE, Ueda from the Bank of Japan, and the Fed Chair Powell from the US, right? So it's going to be an interesting day on Wednesday, starting at 2:30 p.m. UK time. So those are mostly the big news that we have seen. This morning, there was already some commentary in regards to Japan and the concerns of the deterioration of the yen and possible intervention in the end from the Bank of Japan. There are maybe 2 ways to do it. Buying bonds are kind of changing the yield curve control, which is at this point at 0.5% for the 10-year bonds in the end in Japan. So let's see now how the market reacted to all this situation since last week. We start with the dollar. Right, looking at the dollar index, we noticed that the dollar had a slightly move to it carried on initially to the downside. However, then it reversed. It reversed since Thursday, basically since the Bank of England interest rate decision of slightly surprising the market. We moved to the upside. Looking itself at the levels that you are looking in here, basically price is in the middle of the zone. Right, we are in between these lows since the beginning of May, although until this high since the beginning of June, and now we are kind of in this range. Now, price with this move to the upside, it literally reacted from one of the targets that you'll be looking for. Aside from that, it's a little bit compressed. So if price by any chance managed to break above this high, we may continue to move to the upside. However, that high needs to be broken. Otherwise, you may just resume this kind of move that we have been having since the beginning of June. Is this low the right zone to start looking for this kind of a move? Maybe not. Maybe you can look for price to get a little bit closer to the downside before maybe making that big move on the dollar index. So it's just something to keep an eye on, what kind of a move we are going to have in here. Again, also we are at the end of the month and end of the quarter, so expect some volatility, especially in the last day or so, maybe starting on Thursday, because there's maybe some positioning that the big hedge funds and investment firms may do just to reallocate their own portfolios for the beginning of the for the end of the quarter, and then I'll also start adjusting their own portfolios for the next quarter and the last part of the year. So this is in terms of the dollar, what you're looking in here. We move on to the US indices, starting with the S&P, right? We finally had a negative week in the US indices, right? It has been a long time. It has been 1, 2, 3, 4, 5, basically 5 weeks in a row on the S&P that has been just positive, and we finally had a little bit of a retracement on the S&P, right? Nevertheless, the last week moved to the downside. It hasn't really even covered the previous week to the upside. So yeah, it's been a little bit weaker retracement. Nevertheless, it's the first negative week after 5 weeks in a row that has been positive. And we are getting literally close to this previous level of support resistance that we're having here, this level of resistance back in August, right? The high in there that we broke it. So it's going to be an interesting level to see how price can react around this 4,320, 26, something like that. It's a zone that you are looking at. So yes, let's see how price actually is going to move from that level. Maybe by taking these lows in here, it's going to be interesting to see. The way price is moving to downside, you can see how this strong compression, right? We can actually almost follow this trend line. If by any chance you do break above the trend line, maybe that can give you a little bit of a trigger to look for price to test these highs again, right? So expecting maybe that kind of a move this week, maybe before even price continue to downside. So keeping an eye on that previous level support resistance, and then on the test of the highs, and see what may happen in there, right? So this is for the S&P. It's going to be interesting to see what's going to happen in here, and how price is going to react from this level. Just as an idea of a potential setup, maybe you could see, for example, price slightly giving information that it wants to break, right? We could break above this trend line and eventually going a little bit down again, now collecting the liquidity from these lows and also from these ones into that previous level support resistance, and kind of make the move afterwards, feeling how this move to the upside. That could be one opportunity that we have on the S&P this week. Moving on to Nasdaq, again similar to S&P, moving to downside. However, a little bit of a different type of a move, a little bit more momentum. Same lows to look for, right? Eventually to take these lows, and also we do have kind of this zone of previous resistance that may work as a support somewhere in here. So again, keeping an eye whenever Nasdaq managed to break these lows, if it has some kind of reaction from this level, and then we keep pushing price to the upside. A little bit different on Nasdaq, right? Because we kind of fake out that high on the left, not high, several highs in here, right? We managed to break them in there, and then kind of as a fake out, and price retrace to downside. So yes, let's see if by any chance we are still aiming to look for a potential trend continuation setup in here, and we are expecting Nasdaq to continue to be bullish. Maybe a reaction from here or the test of this trend line can be an interesting zone to look for that continuation to the upside. Similar to S&P, we finally had a negative week in here, right? Basically, since the 24th of April that we started this big momentum to the upside, we kind of have 1 and 2 bearish candles in here, weekly bearish candles, but it's basically as a break even, kind of a dodge in there. There's not exactly any type of movement to the downside in here. So it has been quite bullish. Again, first proper clear bearish candle on a weekly basis after the end of April. So let's see if that's going to continue, or it's just a small retracement until price continues to move to the upside in here on Nasdaq. Beginning of July, eventually we are going to start with with the earnings of Q2. So it's something that we are going to pay attention to, in particular for the big tech companies and AI that has been moving quite strongly to the upside. And if the earnings and the expectations actually match the expectations from the market that has been reading how this move to the upside, or is there a big surprise in there? And maybe that can lead a little bit for a move to the downside. So it's going to be interesting in the beginning of July when we have the earnings season for Q2 to start. Then we have Dow, right? Dow has been moving to the downside as well. A little bit of a compression here, moving down. Now we are feeling this compression, so everything looks okay. Dow Jones has been actually quite interesting. Again, eventually, if we do break above this trend line, we may have, or may feel, oh, this spacing here, I'm going to be interesting to see how price can react from there. Can be a good sell opportunity, depending on where these lows are going to react from. For example, if you break below these lows, maybe then we could have a little bit of deep retracement and then have a continuation to the downside. That would be something that we could look for. We'll see if we are going to have that kind of retracement to the upside on Dow. Yeah, looking just a little bit at the DAX and this is in Eurozone. There you go. We did had another break again and kind of retesting again the lows. So it's going to be interesting to see if this is going to hold price, move to the upside, or we start to have another break of a low. Like we kind of broke a few lows in here, then we had another fake out in there. So if you do break another low in there, eventually we are going to start aiming towards that zone. Nevertheless, you may have still another deep retracement, maybe closer to that level before maybe having another move down. So it's going to be interesting to see also what's going to happen on the DAX. Looking now at the other indices related to the currency pairs, in this case, the Euro index, right? We are all the way through retesting this double top, right? And we had a big move to downside around on Friday when the PMI data came out on the Eurozone. We managed to break this low in here, so interesting. We also managed to break this low in here, so bigger picture, we may have an engulf to the downside. Now, question mark is this Euro index going to react from this level and move to the downside, or are you going to still take these highs before making a move to the downside? Something that we can, or that can help us to find out is, as always, look left. Try to look left on the higher time frame and see where actually this high reacted from. Like this high at this point, this high in here is basically reacting from something in here around this level, right? So it was a good reaction initially. However, maybe the last zone that price may wants to go to before the final turn, it can be somewhere at this zone, at this supply level with previous level support resistance as well, to take this high out together and then react from there, and then finally we may have that move occurring, right? So we start having the lows being broken on the way up, so that's something that we always like to see. And yes, to be honest, if I was about to choose one zone in here on the left, I would prefer to see actually price going a little bit closer to that level above this highs before maybe having this big move to the downside on the Euro index. So yes, we may create now this double top in here to attract more sellers, and then eventually we can fake out this level and maybe move to the downside in here. Yeah, is there still orders in here to look for? Yeah, most likely intraday, I think so. So let's see. Again, let's keep an eye on this Euro index to see what may happen. Basically, what I wanted to say is, if you by any chance, if you do break above these highs, we may feel out the space until there, but don't really turn completely bullish, because we are actually starting to get into a really interesting zone around this level. We are showing a little bit of a slow movement here, and then we actually can reverse from there. Looking at the yen, right? And the yen again has been kind of moving to the downside, quite bearish, the yen index. We slightly took that low. Last week we kind of opened a little bit with a gap, took these highs, and we managed to retest the lows, right? We never really managed to break them again, kind of just close this gap. They are creating all these lows in here in alignment. Again, even though this yen index has been a little bit in a range from last week, we finally saw dollar yen moving to the upside, like recovering the momentum that this yen index has created. and starts to be concerned. Like the Bank of Japan is starting to be concerned with how this move to the upside on the dollar yen, for example, move to downside on the yen index. So we are on the dollar yen at this point. I think we crossed to 143, as we've seen a bit. So we are getting close to that 145. That was the first intervention last year. So as we start getting closer to that level, as you can see now, the commentary about doing something, interviewing, it starts to happen. So let's see when that's going to actually happen. We have some reaction on the end with that commentary. So again, it's just something to keep an eye on. There may be some big moves occurring all of a sudden because exactly of that. And eventually, especially if the dollar yen continues to get closer to that 145, we are going to see some kind of movement. Looking at this one in here, yes, we start having this break of a high, which eventually can lead to a move to the upside. We have kind of this trend line in here. Let's see if eventually breaks it. On the other side, you start having a lot of accumulation of lows in here. So eventually it could even be faked out in there and until kind of price makes that move upwards. And then we still have this bigger trend line in here that even if you go slightly higher in here, we eventually can just retest this level. So I have a few zones to look for as a potential target if you move higher. And also be careful with this accumulation of lows in here. So that's a little bit of something to pay attention to on the end. So expect more volatility in the year as well. Looking at the individual currency pairs, and we are going to start with the euro, right? So euro, basically a reverse correlation with the dollar index. So we have a move to the upside until Thursday, and on Thursday around the ECB, around the Bank of England interest rate decision, we had this move to downside, right? And an interesting surprise in an interest rate like the BOE did can be a catalyst to start a new trend in the market, at least for a few weeks or for a new month. Right, so we had all this move to the upside since the beginning of June. So we are testing this level now. So it's a good zone in there, and now we are reacting from this level. So again, kind of a little bit in the middle. It's going to be interesting to see if price is going to react from this level and continue to move to downside, or by any chance if price is going to resume to move to the upside from here, respecting this level of demand and just moving to the upside. So at this point, there's not exactly space, open space in here. So let's see eventually what price is going to do, because this level is actually quite good where actually the euro reacted from. Nevertheless, you broke these lows, so we'll see. Honestly, we will see if we're going to have a continuation here to the upside or not on the euro. Something to keep an eye on for this week. We have pound, right, and the interest rate. There you go, that spike in there. It managed to respect these highs, so that's maybe a good bearish sign of not breaking the highs and holding it. Nevertheless, we had this move to downside, and price now is reacting from this important previous level of resistance that can now become support, right? So it's going to be interesting to see how price is going to behave around this level. Is price going to manage to break below this level? Then you may open doors to go much further down. If not, if price actually holds this level, then you may just resume the move upwards. Bigger picture, right? After taking these highs, maybe where pound wants to go to is towards that level, around 130, basically. Meanwhile, we do have a little bit of a previous level of demand in here that has been holding price now a little bit. But yes, bigger picture, we may still go all the way until that level. So we may retrace a little bit before maybe continue to move higher. So this is something to keep an eye on. Bigger picture, yes, we may still continue to go higher. Now, you do need to find the best opportunities to look for a long. Maybe this level, if you do find a good entry after price react from here, maybe that could be one scenario to keep pushing price to the highs and eventually maybe breaking these highs in here. So again, just something to keep an eye on the pound. Aussie dollar. So Aussie dollar has been the bearish pair in regards to the dollar. Completely moved to downside last week, quite weak in here, and basically filling out this compression after breaking this low. So that has been basically done. So let's see what kind of a move now we are going to have. We do have kind of this structure in here. Are we going to just retrace and resume the move to downside, or are we going to kind of go a little bit lower and then maybe resume the move to to the upside. So a little bit of what you are looking for. This was a good zone where Aussie reacted from, but basically you are in the middle. Like if you compare that, we have this low and this high. Basically, we are kind of trading in the middle at this point in between this level. So there's maybe more room to go all the way until there. Same way there's more room to go all the way until here as well. So eventually we'll see what direction Aussie wants to move towards to. Eventually, I'm expecting maybe for price to take these lows maybe into that level in here. So that's something to look at on the Aussie dollar. Then we have the yen pairs, right? And this is the interesting one, because dollar yen initially has been kind of in a range, while yen index was maybe making out that strong move to downside. Last week, yen index was kind of just in the range, while dollar yen finally managed to go a very bit more to the upside, right? So that's something that we had in here. Looking at the dollar yen, right? It's reached the 143, and we know that and as we mentioned before, one of the key levels to look for is this 145 something, which was exactly the level of the first intervention from last year. And then we had 2 more interventions when price peaked all the way until the 150, 151, close to 152. So this level in here, around 145.5, it's going to be interesting, right? To see most likely there's going to be some kind of intervention or some kind of sell pressure around this level. It's actually, looking at the price itself, it's actually a really good level to look for a potential sell in there. Question mark is, how is price going to get there? Is the pressure on the dollar yen continue to move to the upside or not? Are we going to have some kind of deep retracement before maybe aiming towards that level? A little bit similar to the pound dollar. Like we broke this highs, most likely the next zone is going to be a reaction from this level of structure. Meanwhile, price is kind of having a little bit of a correction because we did have kind of this demand zone that was still that was ignored on the way down. So it kind of works a little bit on the way up, and now as a level of support. Big picture, yes, I'm still looking for price to get closer to that zone. So again, if you do find any good long opportunity, and maybe waiting for a retest to some certain level, maybe you can aim for that long opportunity in here. In terms of any shorts, be careful because as you could see, bigger picture, the target still maybe a little bit higher. So if you are looking for shorts, maybe be a little bit more aggressive with your targets in terms of the way you're going to manage them. Like don't look for home runs at this point for sales. Try to look for the next level of structure and to sell and to close it after that. So yes, this is where basically we are looking at in here on the dollar yen. The remaining of the yen pairs a little bit more of the same, even though the euro is kind of correcting a little bit more. Like the euro yen has been one of the bullish with the more bullish momentum for the last couple of weeks. So it's about time to kind of start correcting a little bit. We are again reacting from that level on the left back in 2008, right? Reacting a little bit from these highs. We may fake out these highs and then move to downside. We'll see. We are starting to slow down a little bit. Nevertheless, this is maybe the range that you're looking for. We may go all the way there, all the way down in there, and then we'll see if you can just resume the move upwards or not, right? So again, interesting. We may start a move 3 in here with price kind of going down, up, maybe going down again until maybe finally have a turn in here. Again, paying attention to whenever dollar yen reach that 145 or gets really close to 145, maybe it's something to keep an eye also how this euro yen, pound yen, and Aussie yen are reacting from because there's maybe a good opportunity to look for a sell also on these pairs. Quite compression in here as well on the pound yen, still kind of moving to the upside, creating new highs, but starting to have deep retracements. Like it's a complete different move from here, where price almost doesn't retrace anytime kind of it goes higher, comparing with nowadays, right? Now it's anytime it goes higher, it has big retracements to the downside. So let's see. This is starting to show a little bit of weakness on this bullish momentum. Again, pound yen, we are getting closer to this level of structure after breaking these highs again. That will be the next destination. So let's see if how price is going to react somewhere in there, or if it wants to get a little bit closer to these highs in here. But while it's getting closer maybe to this level, this is the right moment now to look for that kind of compression move all the way there, which means that there are going to be opportunities either as a long or as a short around this period. And then we have Aussie yen. Aussie yen was the best one to look for a short opportunity. And this is because of what happened also on the Aussie. And you can even look at it also in the terms of the structure itself. It was reacting from this high. So are we getting closer to that high? So that will be maybe one of the best ones to look for a short. If you were aiming to look for a short on the yen pairs, Aussie yen, it would have been the one to select from, right? And this is where it's important, correlation, and to pay attention also to what's going on with the other currency pairs in order to filter out what's the best one, right? To select what is the best one to look for a short. In this case, it would have been Aussie yen, or a long, for example, maybe it would have been dollar yen in this case, to look for a long last week on the dollar yen. Moving on, we go to dollar CAD. Dollar CAD continues its move to the downside after breaking these lows. In here, nice little reaction from this previous level support resistance. Continues with this trend line in here. So what's the next destination? We may get a little bit closer to these lows in here, maybe 1.3, something to keep an eye on dollar CAD. Again, starting to slow down a little bit, but CAD sometimes does like to move like that until finally it turns. So let's see what's going to happen on dollar CAD this week. Again, we're going to have CPI. I think it's Tuesday or Wednesday on CAD in here, right? So interesting, moving to the downside until maybe a bigger, maybe a correction in here may happen. Again, getting closer to this value in here or somewhere in there can be interesting before maybe resuming the move down. Just something to keep an eye on. We have dollar franc Swiss. Like dollar franc Swiss, we had the interest rate decision on the 25 basis points to 1.75 from the Central National Bank, Swiss National Bank. Again, a continuation to move to downside. I've been mentioning I'm looking for price eventually to get closer to this level in here, 0.88525, something like that. Below this above. That's a little bit where I'm looking for on dollar franc Swiss before maybe making a move to the upside. Meanwhile, we are creating kind of this double bottom in here. Continues a little bit with the pressure. We broke slightly this highs, so let's see. But between this range, I'm expecting first price to get closer to this level, maybe before having a big turn in there. So yes, let's see exactly how price is going to move in here. And then we have gold that managed to break slightly new lows this week, last week as well, and then kind of moved a little bit to the upside after last Friday. He had a move to the upside. Again, he's still kind of reacting from this level, from those highs. If you do break above those highs, you may continue to move to the upside, just to try to find out the next level of structure, which kind of maybe somewhere in there. I'm still looking eventually for price to get to that 190.78. I think that can be maybe a good short. Meanwhile, we are at this extreme at this point. Not really sure what will be the next level on gold. I could see it maybe going a little bit lower, maybe going all the way until below this low, maybe for aiming to go higher, or getting a little bit closer to this level in here before any attempt to look to the upside. Like, it has been quite ranging for this last couple of months in here. So that's kind of what we have at this point. Again, keeping an eye of the situation, what's going on in Russia and Ukraine. That can be a good catalyst to expect gold to move. We have oil. Oil, it's another one that has been in this range, in between 67 or 66.9 all the way to 63 or 74. So that's basically where we are on oil. Last week, it was a good short opportunity under test of these highs. And now it's maybe a good long opportunity if these lows continue to hold. Again, it was a little bit of good for the markets and for oil that there was a resolution happening quite quickly on this situation in Russia. Otherwise, you could have seen a big gap in here over when the market opened today. on Monday. Yeah, nothing much. Still the same concerns. Interest rates are increasing, so maybe a little bit of fear of recession or demand that maybe can push price to the downside. China as well. The stimulus that were implemented was not as high, as impactful as the market were expecting. So we kind of had a little bit of a move to downside in that regard as well. On the other hand, we have production being cut on a daily basis, which can try to push price a little bit to the upside. So we are kind of in between these different circumstances. Meanwhile, we are trading in between this range for the last month or so. So we'll see again what's going to happen in here. If by any chance we manage to break below that level and continue to be moving to the downside, or we are going to just resume again, going back to 73, 74 this week. So it's something to keep an eye on. And then we're going to finish with crypto, like in Bitcoin, which again had a massive move to the upside last week. Now, this is something that we were looking for, right? We even managed to create new highs for the year. So if you have been following the channel, and if you notice our analysis in terms of Bitcoin, we noticed that this key level in here around this 25, 24, it was one of the most important zones in here to look for price to hold it. Like if price had managed to break below this level, most likely we would have seen Bitcoin moving a little bit more to the downside. However, price didn't do that. Right? Price actually managed to respect it. Something also that we mentioned last week is that we had a really strong first quarter of the year, January until April. Like we had really big momentum to the upside, and then we were having a negative second quarter of the year, right? But even the move on the second quarter, it was much weaker than comparing with the move to the upside. If you actually bring the Fibonacci in here, you could see that it was around 38% retracement only based on the move that started in the beginning of the year, right? So it was basically touching the 38%. So it was much weaker, right? It was basically the same length of the move, roughly 3 months, however, much weaker. And another point, it was the full compression that you're having, right? Anytime price was moving to downside, there was a big retracement to the upside, basically starting to collect every single orders in here that were remaining behind, and eventually that starts to be weaker. Like we had our first break of a high as well in there. It was actually reacting from a good zone, but bigger picture, it's a break of a high. We start a new compression moving here. We create that liquidity as they always create, this double bottom, until finally we have the turn into that level that we've been looking for a long time. Like, so that happened, and all of a sudden there's no surprise that the move can happen quite quickly, even just comparing with what we are looking at the charts, because all of it has been basically compressed. As price is going down, price is taking the orders, then there's no orders in there, and it's free to just move to the upside with momentum without any retracement. Now we managed to break these highs, and we are still reacting now from this zone in here from May last year, right? So again, we still have a little bit of this level. If price does break above that zone, then maybe you can start aiming to the next level, and that will be maybe starting to get close to 35 or 37 thousand on Bitcoin. Right, so that's something to keep an eye on. Again, this is kind of a little bit of the new structuring here. If you manage to break below it, maybe can go. We start opening a little bit more of a range. Now you can even have a deep retracement all the way back to maybe 27 or 20 or 26, because the move again it was quite quickly. So if price starts to get into this level, there's maybe something in here that can hold it, because aside from that, there's nothing much to hold price up, and then price may needs to go all the way until the next month zone before maybe continue to move to the upside. But before that happens, this one needs to still be broken. Like this whole kind of needs to be broken before that even happens. So it's going to be interesting to see what's going to happen in here on Bitcoin and in the crypto space as well, to see exactly what kind of a move we are going to have. Right? But it was a really strong momentum. I bet many people now are getting bullish again, and maybe aiming or predicting that maybe price can go all the way to 40K or even higher than that. So we'll see exactly what's going to happen in these next couple of weeks on Bitcoin. Yeah, but yes, until we kind of break that high on the left, maybe there's still a little bit of a structure in here that can hold price a little bit to the downside, and we can even correct again, retrace maybe towards this level before maybe continue to move, making another link to the upside. And finishing with Ethereum, again, a little bit move to the upside, a little bit weaker comparing with Bitcoin, right? Bitcoin already managed to create a new high for the year. Ethereum not exactly that. So let's see exactly how it's going to react. There's maybe something in here. One point to compare is, as you can see, Ethereum already reacted from the extreme of this level in May, and Bitcoin initially reacted from there, and now is getting closer to the extreme, right? So Ethereum already reacted from the extreme of this level. Bitcoin is now approaching the extreme of this level in here in May last year, right? So in that sense, Ethereum is kind of leading in that regard. So maybe Ethereum, if in the scenario that price would go to the downside, Ethereum wouldn't really need to break a new high because it already reacted from there, and now it could react maybe just from within or underneath this high, and then maybe moving to the downside. While Bitcoin, yes, it needed to create that new high, and now let's see if it's going to resume the move to the upside, or if both of them eventually manage to break these highs in here from May last year. So yeah, just something to keep an eye on in here. And you'll see we may have again maybe a retracement towards this level before maybe continue to the upside. It's a really interesting previous level structure in here around 1740 or 50, somewhere in there. And that's it, guys. Thank you very much again for taking the time. It's going to be an interesting week ahead to see which direction the dollar goes to. If we're going to have another negative week on the indices, in this case in US indices, if there's going to be any follow-up on this situation in Russia and how the commodities in particular are going to react towards that. Crypto, are you going to continue this rally and momentum on Bitcoin and break above this 31, 32K or not? Or are you going to have some kind of reaction? Again, it's end of the quarter, end of the semester, and usually we have the big institutional firms and hedge funds adjusting their own portfolio, relocating some assets, starting to be ready for the third quarter. So expect some volatility during these last few days before the end of the month. With that being said, guys, thank you very much. Don't forget to subscribe to the channel as well and like it. And I'll see you next week. Thank you. Bye-bye.